Let's go to Evan Lucas. He's the Chief Market Strategist at InvestSMART. Evan, the monetary statement at 11:30, how negative could it be?
Yeah, interesting, Kieran. The negativeness is probably what the market is expecting and what most economists are expecting. We already saw at their meeting on Tuesday that they are going to downgrade GDP from 2.4% to 2.25% for 2020 and 2021. They're also likely to downgrade inflation from around about 1.8% for next year to around about 1.4% on a core basis. The question that really comes out on, as he said, the negativeness, what economists are expecting is their expectation around the consumer and their expectation around the level of wage growth in 2020, 2021. And it currently sits at 2.23% on an average, but public sector is well and truly propping that number up. Private sector is around about 2.1%, and they will also give us outlooks on that. If wages are contracting again, according to the RBA, it's almost guaranteed that 2020 will see at least one more rate cut, despite the fact that you've seen some of the actual private banks saying that any further cuts won't actually help in any shape or form. It'll also therefore really ramp up the idea of quantitative easing in Australia for the first time in 2020 or 2021. And I think that's going to get more and more discussed, I think is probably more the word, and whether or not it comes into fruition next year is a different story, as that negativeness that could be possibly put out today at those numbers come to fruition in actuals next year.
In terms of the property market, some home loan data due?
It is. So we get September, so we still have to wait till probably the December month to get all three rate cuts factoring into the home loan data. The reason it's so important, obviously, it's the amount and the number of home loans that are currently being taken up by the Australian population. Comes out from the Bureau of Statistics. It's expected to increase by around about 1.6% year on year. Now, considering that basically this time last year was the bottom of the clear out from the 2017 high, that's actually pretty reasonable. What is also showing, though, is that although we have seen price increases of around 10% in Melbourne, around about 9% in Sydney over this year, it's the volume of it is very, very low. And that's why there are still people out there believing that the housing market is a little bit different this time around. It is because the supply isn't really on the market like it was through 2013-17, and the home loan data is likely to confirm that. The amount of home loans just haven't really been at the level you would expect, despite the price rising that we've seen in 2019.
How much should we read into news that China is agreeing to begin to roll back the tariffs on the US? What are your thoughts on that? Because certainly Wall Street likes the sound of it.
It does. However, there is certainly growing belief that maybe the Americans still want to sort of play a little bit hardball. There was, as you said, Wall Street very much liked it. But as the day progressed after that news came out at around about 11:30 last night for us here in Australia, the markets eased off as there was reports that maybe inside the White House there are still concerns. The other thing that still hasn't necessarily been agreed on yet is where this is going to happen. And that is the other part of this. This could still take time. The location that the Chinese will accept is also part of it. It needs to happen, let's be honest, because if it doesn't, the September tariffs that were announced this year are due to come into full effect on the 1st of January, and they're the ones that are likely to be rolled back first. So Hawaii looks like the most likely scenario now, rather than where it was currently being proposed, which is in San Francisco. It needs to happen from an Australian-centric point of view. If we can see that the Chinese say yes, so do the Americans. Asian-led recovery markets will happen, and therefore we will get rolled up in that, and that's a very positive thing to finish this year. It's an interesting story that's developing.
Yeah, it sure is. Evan, thanks so much for that. Evan Lucas from InvestSMART.